from a female founder perspective, what we found was a lot of VCs just didn't get it, right? Like and that's okay, but you have to know when to just quickly move on, right? Like and I made the mistake the first time of like just continuing on when you should have stopped ages ago. And so I think for us, it was very quickly like, is this a fit? Yes or no? If no, move on.
Welcome to Inside the Round, where you get to learn about raising capital from founders who have just done it. I'm Helena Fogarty. I'm a fundraising expert who helps startups raise their seed and Series A rounds. And today I'm speaking with Laura McDonald and Dr. Christy Lane, co-founders of Flora Fertility. Flora is the first individually owned fertility insurance platform. This is a policy you own starting around $20 a month and covering the full spectrum of fertility treatment, diagnostics, medication, IUI, and IVF. It's backed by A-rated insurance carriers and a global reinsurance panel. This is a completely new category of insurance started by two second-time founders. Laura previously founded Golden Girl Finance, Canada's largest financial media company for women, and sold it. Christy co-founded the Stanford Wearable Health Lab and Viva Metrica, a predictive health analytics company, which was acquired by Sprout in 2020. They found each other through a mutual contact and incorporated Flora in 2023. Flora raised a pre-seed round in 2024 and just closed a $5 million seed round led by ManchesterStory Group. Two exited founders, 7 kids between them. One of them went through IVF, and both of them have watched women they love navigate a system that makes fertility treatment nearly impossible to afford. So let's figure out how they did it. Thank you guys for coming in today.
Thanks for having us.
This is so exciting. We're shooting this during New York Tech Week. Yes. It's Thursday. We're both beat. Our feet are tired. You guys have also been handling InsurTech, right, this week?
InsurTech Insights.
Yeah.
It's an insurance conference, yeah.
How you holding up?
Good. Little tired,
Yeah,
honestly.
navigating. I think it's been back to back from 7 a.m. till midnight most days. So trying to keep up with work on the side, but lots of great meetings.
Yeah, I've had to say that some things are just not going to happen this week.
Yeah, that's what it feels like.
It's been busy. So let's take it back. I'd love to hear more. I said a little bit in the intro, but I'd love to hear more about why you started Flora Fertility.
Sure. It's always like, who's going to take that one?
I mean, I could start.
Sure.
So personally, I did experience infertility. I was in school for a very long time. And then by the time I graduated and got married, I was already in my early 30s, very career focused. And, I was actually kind of shocked when I figured out that I was having struggles. I found out I have PCOS, now PMOS, and frankly spent years and years through all the different things, all the diagnostics, all the tests, and then IVF and other treatments. Now, thankfully, I have 3 beautiful kids.
It's incredible.
2 born through treatment, and then I had a surprise in my 40s. So that does happen. That does, yeah, exactly. That totally happens. And so for me, I know we're going to talk about our backgrounds, but for me, I've spent most of my career at the intersection of women's health, clinical research, predictive modeling. My previous company was a novel underwriting model as well. And so I was struck at the time I was going through infertility at how there was no community, no education. Nobody was talking about it, right? This is 13 years ago. And I find out now I had friends, even family members going through it, but there was just nobody to talk to, no education. As a clinical scientist, I was coming into it and I was somehow surprised. Like I've taught reproductive physiology and somehow I was like, what's going on? Why am I not getting pregnant? And so I think also struck by the fact that there were no financial options for infertility. So even in Canada, where we have socialized medicine, we paid completely out of pocket. And for us, my husband and I are both professionals. We could afford it. Had we had to go more rounds, we probably couldn't have, right? And it's now 1 in 6 people are needing some kind of treatment to get pregnant. And so for me, Laura has a different why, but for me, my why was my personal experience combined with, what I had built previously just made a lot of sense to be able to solve the problem that I personally had, right? And both from the community and education side, but the finance side is really important. Like right now, as a parent, what we're seeing is that fertility treatment is the third highest cost beyond like saving for a down payment on a home and children's education. So
Wow.
really important problem.
Absolutely. So I'd love to hear your why.
Yeah, I mean, to add to that, I think you referenced Christy and I have 7 children. So we are about the
That's
pretty much
amazing. Okay. I have one and I can't even handle it. Like, it's amazing.
Thank you. And like the interesting thing is we are roughly the same age. I'm actually a year older.
She's a year older.
But we say roughly the same age, and yet our children range from 5 is the youngest on Christy's side, and nearly 21 on my side. So I have 3 young adult daughters. I didn't experience fertility challenges. I think life is never what you think it's going to be, especially when you think you know everything. I look at my daughters now, they think they should have their whole life mapped out. I'm like, you have no idea what career, what finances, where you're going to live, what family's going to look like for you. And so for myself, I was fortunate. I met my husband actually when I was 21 and was married at 23. I mean, not everybody's doing that now. So I ended up having 3 children back to back in my 20s and a son, my daughters, and then my son 5 years after that. So 4 kids, didn't experience infertility, and people really were not talking about it, 20 some years ago. They'd come up to me now and go, the reason I don't have kids is it wasn't necessarily by choice. It's because we struggled for so many years. And so again, Christy, you referenced that the conversation was not there. For me, my background's been in the world of finance and insurance, but more on the consumer-facing side, how we bring new products to market, how we message those products. Because sometimes if you're not in those industries, you don't totally relate to them. So like what's going to make it compelling for people to actually protect risk, take charge of their finances, and particularly around women and wealth. And so I leaned on that as, a few years ago when we were introduced, I was seeing a close family member, a cousin who's like a sister to me, going through fertility treatment.
Yeah.
And I very distinctly remember being at her baby shower because she ended up having, the good news is like the treatment is pretty successful in many cases. She had a beautiful little girl as a result. But at her baby shower, her support group became many others going through treatment, right? Because you needed that community. And hearing their stories, and they live in a city with high income. Most of them are relatively high income earners. But again, most people don't even have, $10,000 set aside in emergency savings, let alone $50,000 for fertility treatment. And even if they do, you need that when you have kids, right? You need to start kids are expensive.
Yes.
And so I was just really struck hearing their stories, really the financial struggles they were facing on top of the physical, the emotional, all of that. And it was kind of keeping me up at night. And the good news at the time, a few years ago, was that you were starting to see some momentum in the space in terms of venture capital, really going, this is a problem that we should put dollars towards. And so you were seeing group models emerge, some more money-back guarantee or financing products around IVF. But there was still this huge coverage gap that 60 to 80% of people just still didn't have coverage for their health plan or group plan. And so that's where we really went, can we solve this together with different backgrounds, different life experiences, different professional backgrounds? Can we solve this? And I think both believing that insurance can play a role in really creating community and capital where it's most needed if we really look at it in different ways. And so then we went on this journey. I think it was not fully realizing, whoa, we're creating a net new insurance product. What is this going to look like? So that's been, you were happy to talk about that, but that's been quite a build and really ultimately as our IP. But we are the first in this space to offer private standalone fertility insurance coverage that you own. It's in your name. It stays with you.
That's awesome. I want to just talk about something really quickly that's a bit of a departure. You talked about having 3 young adult daughters. The ability to be flexible about how your life goes is super important.
Yeah.
Because life's unfair.
Yeah.
Right? There are some people that are going to have sickness. There's some people who are going to have infertility problems. And there's some people that, like, I didn't even plan on having a kid. My husband convinced me and boom, I was able to get pregnant.
Yeah.
So lucky.
Yeah.
Right? But the odds were in my favor in that particular situation. So I think planning for this is really important because it can be financially devastating.
Yeah.
And someone who wanted their entire life to have kids can maybe afford one round, but not multiple.
100%.
The stakes are so high.
Well, and looking at my daughters, especially the ones already, a couple are into university, they're already talking about, I mean, it's a very open discussion now. The great thing is like reproductive health and fertility is more normalized now. So we're having these discussions. There's data that shows like as early as age 23, 72% of women are thinking about their future fertility or having some degree of awareness or even anxiety around it because we're still having kids. We're just having them later, right? So we're seeing some degree of decline in terms of the overall, number of kids being born. But that said, it's just because we're having less teenage pregnancies or pregnancies in our early 20s, we're having them in our 30s. And so when I look at my daughters, they are already thinking about this, but they're also thinking about job security or really like lack of it, how hard it is to get meaningful income, how hard financial security again or lack of it. And then like the whole dating culture has changed, like this hookup culture, as they like to say, right? Like, so I see all this through the lens of my daughters. And then as a parent too, I go, well, okay, they're so young. Their risk from us, from a risk perspective, I can insure them with a Flora plan for $15 a month. And we lock that in for the life of the like that is so inconsequential in terms of financial, but like so consequential and meaningful in terms of this risk we're protecting so that they have optionality going forward. And as a parent, it's a debt that I'm not going to have to take on for them because I've made sure they're protected.
Yeah.
They have $50,000 each if they need it down the road. And hopefully that would likely increase over time with our product.
So tell me, how does it work? Is it, you sign up, you pay a monthly fee, I don't know, and what happens?
Yeah. So it's, as mentioned, it's really the first in this category. And so we had to really build all of the models. And, I had spent a career in not only women's health, but predictive modeling and risk analytics. And my previous company had also been a novel underwriting model. And so we, set out to develop this brand new product based on the data that we had. And what we landed on and what we've built is it's the first individually owned fertility insurance. And so it's women between 20 and 34 who are not already undergoing treatment for infertility. They go to our website, and whether they get there through, individually through an ad or something or word of mouth, or whether they come through their employer or they're a dependent of someone that has this covered by their employer. They just land on our website and they answer a series of questions about themselves, about their medical history, about their lifestyle. And then essentially we give them a monthly price. It's like a subscription model. And that gets them access to $10,000 annually, up to $50,000 lifetime max, up to age 45.
Nice.
And so it's really proactive.
Yeah.
It's truly insurance. A lot of the group models that you're seeing today on the employer side are more just like a pass-through of cost onto the employer. This is individually owned. And so, if a woman does get it through their employer, they can take it with them when they leave, and it will always be theirs.
It's really nice.
Yeah.
So tell me how you guys met and came together and decided to work together.
We were introduced by a common connection at a reinsurer.
We'll call it Mike.
Yeah, Mike. His name's Mike. We tell him we need to give him more credit.
Mike, because he was testing me. We kind of forget about that.
Yeah.
Are we calling him Mike, or is that his actual
Mike's his name.
That's his actual name.
I think I'm comfortable promising.
Yeah. That's his actual name. He works at a reinsurance company, and it was interesting because I had known Mike for years through my previous company and had been building that at the time, but always talked to him. It kept coming up about fertility. And then Laura talked to him as well. I think he was like, well, you guys need to chat. And so this was during the pandemic. We had a Zoom call.
I think there was a
4 years ago.
Your son was still pretty,
Oh, he was a baby. He was like
small.
in a, those like outdoor sun tents.
Yeah.
I had one of those in my office, and he literally just like crawled around. He would have been like 6 months old.
Yeah.
And then we decided eventually to meet up in person and shared a hotel room, which was
two middle age. We're like, we had a separate bedroom, and then we were like conserving costs.
Yes.
But no, I mean, we met, and it was kind of like, let's chat through this. And then we sort of started dabbling, like, well, let's talk to this person about it. Like, here's an idea. We had a deck. It was a good deck, but it was a deck, right? And we started, let's talk to these venture, friends of ours. Let's talk to, we're both connected in the world of insurance and reinsurance and, venture. So we're able to test the idea across various partners. And Christy had also worked for a very large women's health company, building some of their, fertility journeys and data. And so we were able to work closely with them. And that kept on ultimately refining the model with this big sort of, I think, this big goal of like, can we actually create something that is truly proactive, super affordable? Think of it almost like critical illness for fertility, or even weird analogy, but like pet insurance for fertility.
That's what I was thinking about before.
Very similar. Yes.
We operate in a very similar space. And if you think about pet insurance, 10 some years ago, didn't really exist. And it has grown so much. Why? Because we like to call it positive impact insurance. It's not death. It's not disability. It's not transactional like home and auto. It's something that's really meaningful for you to protect in your near enough future, right? It's very emotionally driven. And so we look at the way people were willing to pay out of pocket to protect their pets, their fur babies, if you will. In many cases, you kind of get you get a pet before sometimes you have a baby, right? And so
you think it's practice. It's not actually practice. Because you can't leave a baby alone for 8 hours.
So true.
Thing of water. It doesn't work.
And interestingly, we've done some research that shows they are some very similar type of buyer. But that said, even the premiums are similar. Around, for us, average $40 a month. It's actually less than pet insurance in many cases for that sort of $50,000 of lifetime coverage, reimbursement type of model. A lot of a lot of analogy there and like similarities to pet insurance. So ultimately we thought, can we build something like that? And so many people came up to us and go, like, why hasn't this been done before? This makes so much sense. It's like a security blanket around my future family. And the reason it hasn't been done is because it's really, really hard. And so I think the fact that we are in our 40s, collectively, we have so many decades of experience where you hear about these young founders right out of university. In the world of insurance and highly regulated industries, you need founders with experience and with connections to get that trust. And for us, the biggest barrier, and Christy can talk maybe about building the models, but was to get reinsurance backing. Because cannot underestimate that when you have global reinsurers putting their capital on the line to pay out future claims on the strength of your models. That's really the IP. And that was the first.
So let me stop right there, because there's a lot of people who don't know anything about insurance. Right? So you've got the insurance providers, and then you have reinsurance, which is basically there to provide insurance to the insurance.
Where we operate, it's a great question. And they're across the whole value chain. The entities that people would know most are like an insurance company or a carrier. Right? Those are your, MetLife, Sun Life, AIG, like depending on the, State Farm. And then they have insurers, right? Because an insurance company can't possibly hold enough capital back to pay every claim that they potentially need to claim. So they insure with what are called reinsurers. And then what we are is called an MGA, or a managing general agency. And we sit between the carrier and the customer. So basically we do everything related to selling the policy, servicing it, claims, the relationship with the customer. And then we have reinsurance. So we have a carrier partner. It's called a fronting carrier. And then we have a reinsurer. And it is a very big deal. Like most MGAs either don't end up getting reinsurance, or it can take them up to 5 years to get. And so we were lucky enough to work with an amazing reinsurance broker called Guy Carpenter, and actually an amazing group of women there to secure us truly A-rated partners. And that was really based on the strength of our models. So you imagine, I know you're in venture capital, the due diligence required by these reinsurers to sign on and say, we're going to give you millions of dollars in claims capital, essentially, is like, I would say, a Series B or C level of due diligence. They're deeply in your underwriting model, they're in your actuarial model. And so I spent probably a year building the models. And then it was another, 6 to 9 months of that due diligence to get those partners on board.
Yeah. Is there any consideration when they're looking at you? They're looking at your models, they're looking at all the thought. Do they require a certain amount of money in the bank?
They don't. So, and this is why it's so hard, right? You're essentially saying, we've built this novel thing. Trust us that these mathematical models and our risk models, our underwriting models are going to work. But at the same time, for them, there aren't that many new products that come to market.
Yeah.
Most of the time you're seeing, it's a tweak on auto, or it's like a new supplemental health. This was completely a new category. And so they're obviously conservative about, the first steps, but they're also excited about their possibility in terms of how big can this get, right? How much thought leadership can they get from it? But there are models called captives where you can, as a company, put money into it and take on part of the risk. But for us, just the complexity of that with a small team didn't make sense.
Yeah. You can imagine if we had to raise enough capital in it, to support future claims, that would really be tens of millions of dollars right now, hundreds of millions of dollars in the future. And again, as Christy said, this being a net new product was so interesting to them. Also, the category that it's in many ways, it diversifies it for them because some of theirs would be like a flood, climate insurance.
Catastrophic.
It's very catastrophic. So if we offset that with this, where it's not as catastrophic, it's still in a specialty space, but you've got a 50,000 lifetime maximum. And they are interested in like insurance is really for good. It's to protect us. And so they are interested in exploring new markets where we can leverage.
I'll allow that in this conversation.
What's that?
I'll allow insurance is meant to protect us in this conversation. As someone who lives on a sandbar and was affected by Hurricane Sandy,
I can hear you.
But I'll allow that.
I hear you.
Yeah.
For us, again, we're really looking at,
Yes.
again, as that community side of nobody else is really funding women's health or fertility. So if we can actually pool resources to do that, we think we can have a pretty great impact.
Well, and the catastrophic risk side of it, like when you talk about hurricanes, floods, wildfires, where I live in Canada, that's really prevalent right now. Those are big risks where the potential payout is unknown.
Yes.
Right, where the insurance company is getting enough reinsurance, they think.
Yes.
But then when a hurricane comes,
and
that has a different impact.
Storm ever,
biggest storm ever. It's funny, you're the second person that talks to me about Hurricane Sandy. One of our colleagues talked about that yesterday. But for us, I think what was a lot attractive to them is it was capped. It's it's 10,000 a year. It's 50,000 lifetime maximum, and so they can control that as long as what are called our loss ratios are stable, then it's controllable. And so that's attractive from their perspective.
One thing just to note, I know and agree, like insurance is a very challenging category. And certainly when we're seeing, what's happening with climate risk and all of that. But they're just talking about insurtechs in general, because we were part of a program with InsurTech New York. And there are so many incredibly experienced people trying to tackle these big problems because we know it needs to be fixed.
Yeah.
And so some of our colleagues and cohorts in this program are tackling, like, how do we serve those that are affected by wildfires? How do we get them insurance? So we're also often asked, why aren't carriers doing this first? Why wouldn't they build it internally? And a lot of times it's just their roadmap is so long and they're so narrowly focused on the products that they have in market that innovation for them is hard. They actually want insurtechs to go out and innovate. And then most often they'll either support by being your fronting carrier, you'll get your reinsurance, or they'll acquire you.
Yes.
But there is a strong opportunity for people with experience in this space to tackle these big problems that we're seeing, new problems for insurance to solve and existing ones where it's just not working and we need better solutions.
Yeah, that's amazing. So what are the intricacies of having Flora Fertility in the U.S. versus Canada? Like, how does that
So we're Canadian.
Yes.
But we recognized a couple things. First, the U.S. market is bigger. It's 10 times bigger.
Yeah, absolutely.
Right, basically on every metric. And not to get in the weeds of it, but the insurance structure that you're able to leverage in the U.S. makes go to market faster.
Oh.
So essentially there's a structure in the US where you can say this has never been done before.
Mhm.
You can prove it's never been done before. You can go to market in basically all 50 states
Yeah.
except New York.
New York's a tricky one.
New York's tricky. All 40, 49 states.
Yeah.
And so for us, the speed to market and the size of the market.
Yeah.
That being said, there is a huge opportunity in Canada. I mean, I went through it personally in Canada and paid out of pocket. Canada's more complex though, because each individual province has its own regulatory structure, both from healthcare and insurance.
Yeah.
And some provinces like British Columbia and Ontario, they already have some level of public coverage. Alberta, where I live, has nothing.
Right.
And so we are going to be rolling out Canada hopefully next year, but it just made more business sense to start here.
Ultimately, the data is very similar. Like the underwriting models aren't going to change. The population is similar. Actually, the treatment costs are quite similar across both countries. And then also from a reinsurance perspective, they want a larger market to start. For a product like this, the reinsurers want to come into a bigger market, and then they're willing to go into a secondary market. I mean, we've had interest beyond that from overseas, even in Asia, the Middle East, Europe, UK. But it's every country has their own, complexity, regulatory environment.
Yeah.
You'll need different carriers and reinsurers in many cases. So you do have to obviously be very strategic about that.
Yeah, and there's so much that goes into this conversation in terms of like there are countries that have strong religious cultures and whether this can be done. I think I spent some time living in Costa Rica, and I think they just passed. They're just allowing IVF at this point.
Yeah,
Very Catholic. Country. So
totally.
that has bearing on
The policy side of things, the cultural side of things, 100%. Well, even here, there's complexity there too.
State by state, there's complexity that you have to.
So, are you I'm gonna just sidestep the politics there, but we're because we could talk too long
to do that.
So, are you in New York or you're not in New York now?
Not yet. We're working on it.
Cool.
Yeah, which obviously we need to be, because if you think about our ICP, it's young women who are, planning proactively, thinking about it. Our, frankly, core customer would be young woman, probably graduated in her first job, has some money, maybe doesn't have a partner yet, but is starting to think about it. And think of how many women of that are in this city right now, let alone in the States. So we're working on it.
Yeah, amazing. I mean, I could, count the amount of friends that I have gone through IVF.
Yeah.
Not on one hand.
Yeah.
On two hands.
Lots of hands.
Lots of hands, even more. Yes. I don't know that many people that well that they talk about it. So I'd love to dive a little bit deeper into y'all's background.
Sure.
Sorry, I'm from Indiana, so I threw y'all.
No,
but did you always know that you're going to start companies? Because you both did.
Yeah.
I've done this before.
I think I'm naturally a very entrepreneurial person. I don't have parents who are entrepreneurial at all.
Yeah.
So, and I have a twin sister who's not at all. But I think sometimes you're just kind of born with this desire to create, right? Or you're looking at whatever you're looking at and going, can we make this better? And am I the person to do it?
Yeah.
And so, my entrepreneurial journey. Now, first, I guess when I was 20, early 20s. I started this isn't tech focused at all. This was in the, early 2000s. It was actually just a gift basket company.
Was it at the turn of the century?
No. It's like Y2K.
Oh my God. So funny.
That's funny. But I ended up franchising a corporate
Oh.
gift company across the Canada and the US. Because again, we just kind of created something that would allow women in particular who might be caring for kids to do something from home and have some meaningful income and so forth. And so
That's cool.
that was quite an experience. I think I was 22 or something doing that. And then I ended up, I had a brief stint with an investment firm doing more of their investor relations, communications, and then went back to founding another company, which was the one you referenced earlier. So it was digital. Became the largest company in Canada focused on women and wealth, a digital media company.
Amazing.
And that was really when we used to say, like, we would be on, actually on air, doing morning shows and all of that and go like, really, like the internet's the new campfire where women are congregating to learn about these things. Like that was novel at the time.
Yeah.
And so I came from the perspective, I wasn't in the world of I guess, finance at the time. I had worked for an investment firm, but I wasn't a financial advisor. My partner was, but I was coming from it at the world of I had 3 young kids. I saw that so many of us, we just didn't focus on the financial picture as much as we need to. And how do we create a compelling voice that will reach a broader audience around not just budgeting and penny pinching or e-commerce or shopping or whatever, and how do we look at risk protection and wealth creation and like the stock market and the impact on our lives and the influence we actually have as consumers. And so we ended up figuring out it was really like a lot of hustle, like forming partnerships with Yahoo Finance was big at the time. That got us a lot of eyeballs, and HuffPost, and had a couple books published by Wiley and did book tours.
Just
And
had
so
a couple books published, like it's nothing.
but it was just big. Again, I really lean into what is the story you're telling and the messaging, and how can we make that resonate. And so I ended up having an exit there in 2016. And then I was kind of exhausted from being an entrepreneur. So I took a corporate stint at a large insurance company.
To relax.
Honestly, it was. I have to tell you, those 3 years were like the best. I had a big expense budget. I got paid really well. I had benefits. My kids got braces. It was so good. I sometimes like, be careful what you wish for. And I ended up, a lot of my role was forming relationships with different advisory channels and ultimately their clients, and how we, like a wholesaling role, positioning product. And I actually loved it. It was honestly an honor to work with insurance advisors. I really loved the work they did and getting to know their book of business. But ultimately, I'm an entrepreneur, so I ended up leaving that. I led strategy at a couple startups whose founders I really, admired. But then I got to that point where Flora was just kept on being in the back of my head, and I was ready to kind of tackle something again. And at this point in my life where this purpose-driven model, like really having an impact, meant something. And again, that was what led to the introduction to Christy.
And now back to the doctor. Let's talk to you.
Yeah,
You're a little educated.
We have a different path to here. I mean, I started out my career in academia. I did all the things in academia. So I'm a tenured full professor. And I had always been entrepreneurial as well in different ways, but was very much focused on my research at the time. And I was doing really world-leading research into women's health, wearables, health technology. My first study ever was actually also in the 90s, and it was looking at high-risk bed-rested pregnant women who had never been studied, right? There, you think about how we're doing that.
I'm speechless because there's so much stuff about women that have not been studied, and it's just
So there I was, like, however old I was, 20, right? Yes. Going, okay, I'm going to do a project. I was very interested in pregnancy. I was very interested in women's health. I was an athlete, so I was very interested in the exercise science side of it. And so I went in. It was the coolest study, actually. And I went into a hospital where there were these 20 women of all varying, like twins, triplets. There was 2 quad pregnancies. They had like gestational diabetes. And I put wearables on them and looked at their blood glucose, looked at their nutrition. Anyways, that was my first foray into women's health, but I had always been doing stuff in wearables and health tech and health outcomes. And so I became a professor at Stanford and started the Wearable Health Lab at Stanford to do that kind of research. But all along, I was winning the awards and doing the research, but I was finding that it was frustrating that it didn't go beyond the walls of academia. You would have your colleagues say, this was a great paper, or didn't you do this great job on this clinical trial? And I'm going, well, but why isn't this being adopted into clinical practice? Why aren't people listening about wearables and how they can be applied? And so I actually started my first company on maternity leave with my first daughter. So this was 2013. And that was I had built algorithms with wearable data to understand risk of disease and mortality. And I thought this was going to be public health, right? Like you get an app, that says, here are your risks. Here's what you do about it. Like you're seeing a lot of that come out in the market right now. And I'm like, guys, I was building this 15 years ago.
Yeah.
But what ended up happening and how I ended up in insurance was our first customers were actually life insurance companies and global reinsurance companies. So I was flying around. Our first customer was actually a reinsurer in China. So flying to Europe, Asia, everywhere, building these novel underwriting models is what it became. And so absolutely loved that. Sold that in 2020. And then I was doing sole proprietor consulting. I built a pretty robust consulting business, always working at this intersection of insurtech and digital health, working with pharma companies, helping them figure out their wearable strategy with the FDA. I ran B2B sales for a couple of startups for a long time. And that's how I ended up in VC, actually. So the VC firm that I'm still a venture partner of, IA Capital, they were considering investing in my company when I ended up selling it. So I've spent some time in venture on the other side. But this was, something I had been thinking about for a long time. And so when Laura and I met, it really made sense. And it's also like you get to a point in your life and your career where you can choose what you want to do as opposed to got to get the job, got to get the promotion, got to publish more papers in my case. And this was, I had an exit. I was having so much fun consulting, but then this was something that, I chose to do because it was such a, combination of passion based on personal experience with the ability to build it.
Yeah. So something that comes to me from hearing both your stories, very small part of your stories, is the hustle, the sales.
Yeah.
You guys have both generated sales for your own businesses.
Yeah.
You ran, even consulting. Like people underestimate the amount of relationships and sales we need to do there. Yeah. And you both had exits. So you both built and sold, which is incredible.
Yeah.
And gives you a really cool place to come from into this company.
Well, and you make all the mistakes.
Yeah.
The first
you
time.
think you make all the mistakes.
Well, all the mistakes. You make a lot of the mistakes, right? And you're you're building from a place of, for me anyways, building from a place of coming from academia. I mean, I was at Stanford, though, which has to be probably the most entrepreneurial university in the world.
Yes.
Where if you are not building something, if you're not on the board of a million company, a couple companies, you're kind of looked down on. And so, but you make the mistakes. Not all of them, but a lot of them. And so you learn from that.
And I think what I take from that, when you build some degree of confidence, not that it can be it can still be wavering depending on the situation, and it's a muscle. Like actually, so when I think actually back to the role I had, the brief stint in an insurance company working with wholesaling and meeting 20 advisors a week, that's a muscle to get out there and go out and just pitch, talk, move something forward.
Yep.
It doesn't come easy to most people.
Yeah.
But you build up, your stamina to do that. And so the same applies when you're fundraising. Like when you are literally on Zoom calls, either pitching, these potential VC partners, investors, other partners who you want for distribution. Like you are selling yourself and your company pretty much all day. I mean, now a lot of our meetings are a little bit more, Zoom, it's lots of Zoom meetings still, more internal. But you do build up that stamina. And I think the other thing that I take away from our journeys is, I know, Christy, you mentioned building Viva Metrica when you're on mat leave. I think about I really had my 4 kids and they were little, like 3 daughters and 3 years, when I was building the digital media company that I had. And also when I went on a book tour, they said, you have this amount of time to write your second book. And I'm like, fine, I'm pregnant. That's my deadline.
Yeah.
And then your book tour is going to be when your baby is 6 weeks old and you're going to go across the country. I was like, okay. And I strapped my son on and we went. And so I think for me, I know not having kids, it can be scary to think about letting kids enter your life and your picture. Is it going to slow you down? Or are you going to be able to accomplish everything? And I would say, and we've been fortunate, it's made us better, faster, stronger in many cases. So I always tell anybody who's worried about having kids and building a family, like your life doesn't stop. Like you
No.
just, if you wanted to, if you want to take a break, absolutely go for it. But you can like really just keep going. And I think you'll find that there'll be so many more things that you want to do, or that your perspective opens up about things you can tackle differently.
Yeah.
So it's been
Yeah. Actually, speaking of strapping kids
Yes.
to yourself and traveling, my middle daughter was born, Maeve, in the middle of building my company.
Yeah.
And she was on 42 flights in her first year of life because I literally just strapped her to me. I scrolled back to look and see if she's still there. She's on the United Airlines main page. It's like this cutest picture. It's like little jet setter. But you have to just, it's probably for a different podcast and maybe not your topic, but like the interactions that you have as a mom with, whether it's VCs or potential partners, I think that drives a lot of that relationship building, either in a good way or in a bad way.
Yeah.
Right?
Yeah.
Like I brought, it was probably Maeve, in a stroller into a VC meeting.
Yep.
And he literally looked at the stroller and was like, "Is that a baby?" Like, yes, it's a baby. Like,
Kind of
she's
like how people
fine.
would say you brought a baby into a bar.
Yeah.
Let's say you brought a baby into a VC meeting.
But I was like, look, I'm here with her. I'm breastfeeding, so I'm here with her, or I'm not here. And I need to be here. So I think those are really conversations we need to be having about how do you how do you manage it all?
Well, we need more women getting venture capital, so they need to be more open to the fact that you are juggling in many cases, parenting, caregiving. It should be okay. You're on a Zoom call and your kid walks in,
It's like every meeting.
It's so cute, actually, and I find most people kind of like it. Like they're also dealing with things in their own life and their parenting, and so it would become much more open to, I think, diverse founders and to female founders and founders with kids that they're managing. All of that.
I think something may have happened during COVID as we got more virtual. The walls came down. So living in New York City, being a New York City fashion girl, which is where I was at one point, I felt like things were very siloed. Like you wanted to show that you had it all together all the time.
Yeah.
And those people who had kids, like, you didn't really talk about that.
Yeah.
Like it was work, and act like I don't have kids, and then go home and take care of the kids, right?
Yeah,
and
totally.
I feel like with COVID, those walls got broken down because we were all stuck.
What was that one name of the BBC guy? Yes. Do you remember that one? The BBC guy, and the toddler came in the background. You remember that one? And everyone was like, "Oh my gosh, this is hilarious!" Because then the mom came in and is like trying. But I agree with you. I think that it just opened up. Like as Laura said, I literally had Gareth, my little guy, who's now 5, in a tent behind me, and people are like, "What's that behind you?" And I'm like, well, we're all at home. He's here. Like, it is what it is.
But I love that. And one of the things I'm very passionate about is getting more diverse founders funded. And it would be nice if we can break down those walls even further.
Yeah.
And recognize that, parents are also founders.
Yeah.
Yeah.
Right?
Yeah.
All kinds of people are founders. So how do you guys break up the work? How did you choose the roles that you represent in your company?
I don't think we had to choose, really.
Pretty
Like,
seamless.
we're just like, I oversee product, right? And the technical side, the insurance side of product. And then Laura can say what she does, but we share sales. Like we share the B2B sales.
Right. Sales and fundraising, we're both.
We're both of us.
Both of those. Mine is definitely more the distribution, the go-to-market. And again, really that's story like every, whether it's a corporate deck or a consumer facing, and I have a team we work with, but I'm, again, the power of words and language, still looking at every single word and like, are we telling the story correctly depending on who the audience is, right? And so, it's been a pretty seamless sort of division, and now our team's growing, so it's great that we have, people to support each side.
Cool.
But ultimately, we tackle the big decisions, the big, the investors, the big partners, especially on the employer side. It's been a big market for us. We're tackling that together, and we're co-CEOs, so we should definitely share the leadership.
That's amazing. I want to talk about fundraising now.
Yeah.
All right, you ready?
Ready. We're ready.
So where do you see storytelling versus relationships in raising the first round and the second round? And was there a difference?
In in our experience.
Yeah, because, okay, so my point of view is I over-index on the network part of this.
Yeah.
I think networking makes up for maybe some lack in the polish of the storytelling.
Yeah.
Your relationships, to me, are the most important thing. And of course, you have to have the fundamentals and you have to be telling a story. But I'm less concerned, like when people, not you, I promise, but when, let's say, consultants are like, oh, it's all about the storytelling, my eyes glaze over.
Yeah.
Because I think it's more about the relationships. So I don't know where y'all stand on that.
I mean, for me,
Yeah.
my experience anyways was the first time I was raising, I was a professor,
Yeah.
right? And my team, my co-founders were a surgeon and a Stanford doctor. And so I think early on pitching, I definitely over-indexed on, I don't know if I would call it the story. I over-indexed on the science,
Yeah.
right? Like the product, like aren't these models so impressive? And don't you want to learn about the intricacies of these algorithms? But pretty quickly, like fast learner figured out that that's not really what they want to hear about, right? But at the time, I did not have the luxury of the network. And so
Even though you were
harder.
Stanford and a surgeon.
Well, through Stanford, but we knew the medical network.
Yeah.
So we raised a lot of our money through just high net worth doctors, frankly, and people that we knew. But when it came to the round of real venture capital, it was a different story altogether. And so I think I've always been a networker, always, need to know everybody. And so I did that in my academic world, and I still keep in touch with those folks. But for me, as I entered into insurance and in the world of working with carriers and reinsurers and VC, it did make it easier the second time. So sold that company, but then this time for us, like I had spent years in VC on the other side, hearing hundreds of pitches, talking to other founders, to your point, listening to what resonated. And I will say, with VC hat on, the relationship to me, I would say, is more important. Like you hear the pitch, but it's, is that someone you think can do the thing?
Yeah.
Can they get it done? Do they have the right team? Is the idea good? Yes, that obviously matters. Is the market big enough? But what I've found is both for us and, for Flora fundraising and also for, other founders coming in, a warm introduction is just gold, right? Like and especially if it's from someone that's trusted.
Yes.
Because I think that they've already pre-vetted.
Yes.
Sometimes the idea, oftentimes it's just the person. Like I do, I don't know, 5 intros a day for people. And oftentimes it's I don't know anything about their market or their industry, but I know them and I know they're, a good person, but also a smart, capable person.
Yeah.
So I think for us, when it came to fundraising for Flora, it was easier, not saying easier, just because we had that network in VC, but also within the industry. Like our lead investor that you mentioned, ManchesterStory, they're an InsurTech VC. I already knew them.
Yeah.
I had been at happy hours with them. We had talked about co-investing on deals together. And so there's already that level of trust. But that's hard, right? Like if you're a first-time founder, you're not going to have that. And so I would say, like, to your point, building your network, asking questions, talking to people, just asking for the intro, I think makes a big difference.
Yeah.
Yeah.
And I agree, absolutely. Network, and that's been one of we both came in with a lot of connections. I think, again, because of the decades of, you've met so many people across different industries. But in terms of storytelling, and that kind of sounds, maybe it sounds fluffy, like artifice, if you will, but it's not. It's really like, how are we positioning? What is the product and how are we positioning it? How are we realizing? Because we would be told, oh, that's such a nice niche market. And we're going, okay, wait, it's not niche because we're not even like looking at the 1 in 6 who need treatment or the percentage of that in IVF. We're looking at this broader existential sort of crisis that for our TAM is 35 to 50 million women who we can serve. And so telling that story, and so often I would say we've never really had to cold call a venture firm. And a lot of them are intros. We know people, or it's, they come, but warm intros or whatever, but a lot of them are coming directly to us because they're hearing about us, in the industry, and they're going, wow, we've never heard of this before. It's so unusual to come across a product that's never been done before. So I really think it's a mix. We work with an amazing PR agency as well, and Hannah Cranston Media, and they've also been phenomenal at really kind of under early stage coming to us and going like, we want to amplify your story, and getting that press and visibility early on, it does help.
Oh, it totally helps.
Yeah.
And I guess when I think storytelling, I think the story is making things nicer, and actually storytelling is actually part of the strategy, like going in and making the right decisions so there's the right story to tell.
Yeah. Yeah.
When you have to be able to tell the story about the product, right?
Yes.
Like essentially it's very early product marketing.
Yeah.
But it's taking it out of the weeds of the product into why does this matter? Like the who cares. And I think for us with this problem, the amazing thing, and it's not lucky, it's the fact that it resonates with almost everybody, right? You go into a room of people and either that individual has been through infertility or they know somebody who has, or in the case of my kids, they were born through it, right? Like my 12-year-old, she's already talking to her friends on the playground about, oh, hey, were you born through IVF? Or, and so the conversations are happening, but I think it is that piece of storytelling is important. It's the why and the who cares piece.
And we actually raised our pre-seed round, which was a couple million, before even having our reinsurance capacity. So that was really based on certainly our backgrounds and like the team that we were bringing together. That carries a lot of weight. Like, do you believe in the founders, right? To actually be able to execute on this? Do they have the expertise? But again, also, was it like, what is that big vision? Can they accomplish this? There was a lot that that was a risky pre-seed, was still very early stage, but we managed to do it based on this overall vision and our network connections and our backgrounds and the problem that we were tackling.
Any tips for founders who are raising pre-seed right now?
God, pre-seed is so hard. It is so hard. From our experience and my experience historically, I don't think enough people leverage venture studios enough. And that's what we did. So we worked very early on with a group called Highline Beta out of Toronto, which actually I met the guy at this conference 3 years ago, InsurTech Insights, Ben. And Venture Studio, if people don't know what that is, it's really like they're co-building it with you. They take a piece of equity and then they're providing you with essentially services like an embedded team. And for co-founders like us, especially like non-technical from the sense that neither of us codes, right? That's great to get started if it's a tech company, if it's not, obviously. But I think that's a great way to get started. But pre-seed is really tricky, and there are fewer pre-seed investors. One of ours, Everywhere Ventures,
great.
Fantastic. They only do pre-seed. But for them, from what we can tell, a lot of how they operate is through warm intros. And so it is for founders, I would say, go to the events. Talk to people. Build your network, right? Like put yourself out there. Enter into accelerator programs. Like we entered into this InsurTech New York MGA lab, and we went in there thinking we're going to do it this way. And we ended up doing it a different way, which actually led to our ability to raise that pre-seed.
And you said go to the events. And I think that is so important. I think sometimes early stage founders, they think, especially in the world that we're in, like everything can be accomplished via Zoom or email, and you don't have a much budget to actually like get on a plane and like pay to attend a conference or go meet somebody in person who could be. And I'm such a proponent of like still this human face-to-face meeting in person. You'll often find at the conference it's the happy hours, it's the after hours where you're really just connecting with people as humans. Nobody wants to be pitched at all day long. They just want to get to know you as a person, and then they're more likely to go, let's talk. Like, let me hear what you're up to.
And people get caught up in the exuberance and the happiness of the experience.
Right?
And they're like,
positive reinforcement. So like go out there, get FaceTime, real FaceTime with people. And if they're willing to meet you in person, fly out there.
And who was the primary person you spoke with at Everywhere? The
Jenny Fielding.
Amazing.
Yeah, we're actually having coffee with her tomorrow.
And Scott Hartley too.
And Scott,
Excellent.
Yeah.
That's so good. I've read her book and I've seen her quite a bit. Amazing. So let's see. Was it hard to raise money when there are no kind of comps out there since it's a new product?
I mean, yes. I mean, I think fundraising is always hard, right? From a female founder perspective, what we found was a lot of VCs just didn't get it.
Yeah.
Right? Like they just, and that's okay. But you have to know when to just quickly move on.
Yeah.
Right? Like, and I made the mistake the first time of like just continuing on when you should have stopped ages ago. And so I think for us, it was very quickly like, is this a fit? Yes or no? If no, move on. And so frankly, because of this network that we have, we were probably faster than I think others might be in the space, but it was still challenging. Like we're talking hundreds of meetings and months. We tried our best to run a really tight process. But when you're female founders who are now receiving less than 2% of overall venture funding, building in essentially women's health and fintech, insurtech, whatever you want to call it. So it was, but we have some amazing investors who get it. And actually both of the leads, so ManchesterStory, our lead investor there, Nicole Gunderson, she got it immediately. And then Mickey Reynolds from Slauson & Co., our other main investor, also got it immediately. And so I think that's to your earlier point around network and it being the people, they understood really quickly.
Well, and for us, for the seed round, because we're in insurance, and again, not all VCs understand insurance and the time it takes to bring something to market and the regulatory environment, it was really important for us to be selective on the lead and that they be somebody who understands insurance. We couldn't think of a better partner than ManchesterStory, who are so respected in the insurtech space. So once you have them as the lead, you had so much interest from others that are more consumer aligned or maybe employer aligned. They needed the insurance lead to vet it, right? To know that they had done the deep due diligence. And then the others were, ready to come in. And so Slauson is a culturally aligned consumer fund. They actually couldn't really be more different in their approach. And that's the best thing. They bring such diversity, to our cap table and to the way they can help us and their network.
Different expertise.
And we also brought in True Stage Ventures, who are leader with all the credit unions across the entire U.S. And so for us, how do we incorporate within the financial systems and community? So selective about who we brought in, but then with any fundraising, it's hard to get that first term sheet. It's hard to get, the lead, but then a lot of others want to join and you go, okay, no, our round is closed now. It's tempting to keep on taking money, but there's dilution, right? That happens that you want to be mindful of. You want to, position yourselves appropriately with enough runway. So we've got a couple of years runway and then we get hopefully to that, that big Series A.
Yeah, amazing. Was there any pushback on having a venture studio own a portion of your cap table?
And I know that can sometimes come up. Yeah. But the venture studio we partnered with doesn't take the percentage of equity that they take is a lot lower than some of the existing models.
Great. Yeah.
And certainly they've been. We can't credit them. They've been incredible.
They've been amazing
partners. So I do know that can occasionally come up because it's sort of an outsized percentage of equity that they would take early on, but that was not the case for us.
But sometimes it's the right thing to do. Right? Yeah. Depending on who you are as a co-founding team, how do you actually build what you need to build? Yeah. I think there sometimes can be pushback based on the percentage, but if it's truly a value add, which in our case it is, like Ben is still on our board and adding value all the time. Yeah. Because you just, at some point, you're either doing it or you're not doing it. And in our case, they were the ones that believed very early that we could do this and that this was a great idea. And so, that's invaluable, I would say.
Yeah.
Yeah.
Do you guys have a list of people you wouldn't take money from after meeting with them once or more?
Oh, for sure.
Yeah. We get their color coded on the spreadsheet.
For sure. But also like to the earlier point around people not getting it. Lack of just cultural alignment, I would say. And really we wanted not only investors or VCs that understood the problem, but really wanted to build alongside us, right? Like, so ManchesterStory, their LPs are all insurance companies, right? True Stage is credit unions, Lawson is culturally aligned LPs. And so, I mean, but yes, I think everybody probably does.
And I mean, overall, I think the experience has been quite good. But and ultimately, I think you want an investor who, if they're texting you or they're wanting to get on the phone with you, you're not like
Stressed
inside
about it.
all stressed about it. Like you're happy to get on a call with them. They lead with like how can I help? I want to make this intro. Like people you just like, right? It all comes back to relationships. You need to.
You're going to be in a relationship with these people for
Totally.
Like you let somebody on
Probably
your
10
cap
years.
table. That is the big thing to remember. If somebody comes on your cap table, they are on your cap table. And so I know even when we moved to like a priced round, all of a sudden maybe you gave some options to somebody who did some advising and they have just a tiny percent of options, but they're signing off on a bunch of stuff.
Fun things,
Like just you got to be careful and keep that clean cap table, because when it comes time to like the
Raise
legal
bigger
side of
rounds.
it and raising bigger rounds, they're still signing off on things.
100%. Yeah, I know a company I was working with has a very small investor that had sign off on their Series A round, and if it didn't get signed off in time, things would happen and it was delayed. It was just, it was stress that was not unnecessary.
Yeah.
Like closing around, even when everybody's committed, like that was very stressful. Like, can we get this? The timeline and like the amount of time you work with your lawyers. And we had an amazing lawyer who just had our back. But it's tough.
But I think people forget. So you asked about, advice for other founders. I think a lot of first-timer, or first-time raising, first-time founders really see the dynamic as the funding. The venture capitalists are here and they're here.
I love that you're saying this. Thank you.
Right?
Keep going.
Like,
yes.
Like where they're like, okay, it's this hierarchy where
may I have some money?
like I'm begging you for money. You know what I mean? And you kind of like, for me, the first time I kind of felt like that. I was like, oh my gosh, who are these people? Like they have all the money. But what you realize, the more experience you have, is that it really should be like this.
Yes.
Right? Like that relationship has to work in both directions. You have to be aligned. Yes, they're bringing the money, but their business is also on the line, right? They're choosing you just as much as you're choosing them.
Yes.
And so I think if you have a really compelling idea, a good team, it really shouldn't be, like this.
Yes.
It should be like you're aligning or you're not aligning.
Yeah. And just that dynamic is not how you raise money. Yeah.
No. Yeah. Well, and the other thing I think a lot of people realize is that most of the time, especially in venture capital, it's not those people that you're meeting with. It's not their money.
Yeah.
Right? It's money from limited partners or LPs who are saying, here's our millions of dollars. You go and deploy this in the way that you want. So they're having to make hard decisions too.
And they have fiduciary duty.
100%.
To their LPs.
And I think it's eye-opening when you get off, when they're also fundraising.
Yes.
Like when you realize that they're also in your chair,
time.
like they're getting off the call with you to go fundraise for their round. And sometimes your venture investors will come to you and go like, if you know anybody, we're raising our next round. And you're like, okay, they get it. We're all doing the same thing, just from a slightly different angle here.
That's part of the reason why we have the other part of this podcast, which is where we talk to VCs. And yes, it's to talk about how they evaluate founders, but also to talk about what it's like to be a VC.
How do they raise money? Well, and things are changing, right? Like part of what I did as a venture partner was help fundraise. And it's funny because it's so similar. Basically, it's sales.
Yeah.
Right? It's sales. And it's, can you tell your story? Can you convince somebody, like, whether it's for your company that's going to do the right thing, or are you going to be able to return,
do they trust you, relationships, all of that.
All of it same.
100%. Yeah. Any hot takes on the startup ecosystem right now?
Well, I mean, we hosted an amazing panel.
That was great.
Hopefully it was amazing. You were there.
It was amazing. Yes.
At our PR firm the other day about hormones, AI, and money. Right? And you would necessarily think that those things all go together.
It was great.
But why I'm saying this is that I think the ecosystem around women in general, women's health, women's finance, And I was really just almost blown away on that panel listening to, because it was us, Laura and I, and then it was Jenny from a company called Claire, that's a hormonal tracking wearable, and then Katrin from Fritch, which is, essentially financial education, how much commonality there was in terms of what the market pull is right now.
Yeah.
And so I think what's exciting is, obviously AI is having an impact on everything, but I don't necessarily think that's the hot take. I think it's the how are people building alongside and with AI, but still with the consumer in mind and still with human in the loop. And you're already seeing from a VC perspective, not a decline yet, but I think it's coming soon where all of these were AI for this, AI for that. That's almost table stakes now. Everybody can use Claude.
Yes.
Right? It's then what are you building with that? Is it meaningful? I think we're seeing the care economy really is where I'm going with this, is growing.
Yeah.
And the human connection still being there, I think is
we were
what's
just
exciting
talking
right
about
now.
that before we walked in with our head of production. But also, I think human connection.
Yeah.
And we've been talking about relationships.
Yeah.
But also knowing your customer.
Totally.
You can't skip over that.
Yeah.
A lot of people are trying.
I would say there's a lot of VCs who are, again, going back to, they're open to consumer brands. They're even more open to D2C. They think that brands can kind of own the space and own the market, where you used to even 5 years ago, it was like B2B SaaS models.
Yes. Yeah.
Like that's all. If you're not B2B,
Yeah.
I will say in Canada, we really like B2B SaaS models too. And so, but the fact that somebody said to us, "Are you a product or are you a brand?" Because they fell in love with our brand. They fell in love with Flora, like what it meant, what it evoked in them, the feeling, what it was trying to do, how it could expand. And ultimately, we're a brand, and we think we can own the space, and we think we can become a household name and brand that has impact on. We lead with fertility, but how can we look at pre-fertility, post-fertility, women's health, women's financial wellness? How do we create that ecosystem?
It's like your possibility.
Yeah.
Exactly. Yeah. And we do, to your point, really want to understand consumer, right? And that's why we're hiring great people to help us do that.
Yeah.
Like Laura and I are Gen X, right? Laura has Gen Z children, mine are Gen Alpha. So we can understand so much from them, but really it is, I actually moderated a panel yesterday where almost half of it was talking about how do we meet Gen Z where they are.
Yeah.
Right. And truly understand them. And there was a guy we were talking to last night that literally said, nobody understands my generation. He's like, everybody's trying to, but nobody really gets it. And that was so interesting because, to your point, I think we really have to do that.
Yeah.
Really have to spend the time to understand them.
Yeah, for sure. Gen X, the best. Anyway.
Agreed.
Okay.
Totally agreed.
What do you wish you had known a year ago?
Oh, wow. Okay, I'll say, and this is like a very specific thing because I'm overseeing product.
Yeah.
I wish that strategically we had known how much interest and pull we were going to get from the employer side of the market.
Love that. I love the concept of pull.
Right?
Pull is so great. Yes.
It is, right? When you're building a business. And so, we thought we had our strategy. Okay, well, we're going to get X number of policies. We're going to aim for this based primarily on D2C and channel partners. And so we built for that, right? We built the product infrastructure for that. And then we were lucky enough to get accepted to this accelerator, Broker Tech Ventures. And almost within the span of a month, we had to stand up an entire employer-facing front end and back end.
Yeah.
And so for me, I don't love doing things at that speed. I know that sounds crazy as a startup, but you know what I mean? So for me, it would have been, I wish we had foreseen that level of pull from the employer market and being able to, spend some more time, frankly,
Yeah.
planning for that.
Yeah. Anything from you?
It's such a good question. There's certainly things we've learned about our business, as Christy referenced, that we're now, it's a good problem to have. You're getting all this interest and just tackling it literally in real time. Oh my gosh, we need to build this marketing asset.
It's like
or this
building
product.
the plane while you're flying it analogy.
Today.
Yeah.
Maybe I wouldn't have known. I wish I would have known. I'm not going to say this, how hard it is. Literally, the days. I thought you think it was hard a year ago, and you think it's going to be that much easier once we raise because we're going to be able to hire. But hiring also comes with managing more people. So there are days when, and fortunately, my kids are older, so I can Christy, the amount that she does with her kids, them being little, is mind blowing. But my kids are older, so I can almost be and she is also laser focused, but I don't need to spend as much time caregiving now. But there are days when you're you are literally, you might be on your phone for 16 hours straight because you're not opening up your laptop, your plane's working. And just it brings me back to those when my kids were really, really little and you're just constantly being attacked with something, you have to respond to it and then go on to the next thing. So maybe if I'd had more perspective, that would have helped. But
maybe not.
I don't know if that would have helped. So
there's a great quote from Jensen Huang of NVIDIA, and that says would he do it again? He's absolutely not. He's one of the richest people in the world. Right?
Yeah.
It's it is tough being an aunt, and no matter how much you raise or how far you get, sometimes there's just more zeros or dollars, but it's
well, and you
have challenges.
You gotta hiring for us. We raised the round, and then we brought on essentially 4 people within the span of a week. And Diane, our new COO, who's sitting outside here, we hired her. She lives in the same city as me, and I had a coffee with her, and I said, "Congratulations, welcome. I'm going to be away traveling for almost the entire month of April. So I'll do my best to help you." Right. And she was like, "Okay, I'm just going to start doing what I'm doing. You let me know, if I'm stepping the wrong direction." And so that that piece of wanting to build the team, but trying to run the business at the same time. But that wasn't a surprise. I think we both knew that was coming. But that's a challenge.
Our CFO said to us, "Do you want an executive assistant? We think you should have an executive assistant between you." We're "No, we manage our own." But again, it comes down to somebody needs a $30 e-transfer. Okay, let me in between an investment. Let me do the e-transfer. Let's create this employment contract for this person. You're still doing so many things, but we're figuring it out.
Yeah.
We've got a great team.
Yeah. So on that tip, how do you guys stay sane? How do you take care of yourselves? You've got very full lives, very big business that you're growing. When do you sleep? When do you,
I'm going to give a shout out to my husband.
Yes.
Because he is I don't know how he does it. You're I don't know how you do it. I don't know how he does it, right? I'm away. I was away almost all of April. 4 different trips, and now away for this whole week. And he has a full-time job.
Yeah.
Right? I don't know how he does it. He manages all the kids. And so I would never be able to do this.
So good partner.
Without him.
Yeah. I love that you're shouting out a good partner because I've seen so many profiles of male CEOs. It doesn't mention the unpaid labor that's happening at home.
Well, and he has a full-time job.
Yeah.
So many people ask me, he doesn't work, right? And I'm no, he works. He manages tax for a giant firm. He works, but I think for me, that's part of it. And then the thing that's really important, and I've been on podcasts about work-life balance, which frankly probably shouldn't because I'm not that great at it. Better than my first company. And so when Laura and I first met, I was very clear. I said, if I'm going to do this again, if I'm going to start another company, I want to try harder at the balance. And so that means being on when you're on, right? Working when you're working. And obviously we're answering emails in the evening and Slack and whatever, but for me anyways, doing my best to, when I'm with my kids and my husband, being present, right? Spending the time with them, going to their sports. We travel a lot together and really trying to carve out that time, because I think if you don't do that, you burn out.
Yeah.
And it's hard to come back from.
Yeah, for sure.
I'm going to echo, it's relationships again, right? I have a wonderful husband who has really stepped up the more, because we travel almost feels like 50% of the time because our products in the U.S. we're often on the road. So he's really stepped up. And he's here right now in New York with my son, taking him around because I took our daughters away on a little trip, a few weeks ago. So they're, like he's an amazing father. My kids, especially my young adult daughters, they're like, Mom, we've never seen somebody work so hard. I love that they're saying that, they're recognizing it. And then sometimes I'll just have a rough day and they'll be like, give me a little note or like a little hug. And then beyond that, I have an incredible group of friends. I think about my girlfriends. I was so fortunate to meet some incredible women as I was raising my kids. And when I just need to I don't want to have to pitch anything. Don't ask me about work. I just want to honestly.
Just want to be a person.
We just get together. We laugh a lot. We dance a lot. I love dancing. That is to try to have weekends. I think we really do try to go. It's a weekend. I get to sleep in as late as I want.
Yeah, I do not because I have a 5-year-old waking me up at 6.
You do have to find that time if you can.
Excellent. I think that's it. And I really appreciate any last words.
Well, thanks for having us.
Thank
This
you.
has been a great conversation.
It's been so fun. I wish we could stay in this room for the rest of the day, but I know you have things to do, and as do I. So thank you so much for being here during this week.
Yeah.
I know you're busy and tired.
We were excited to do this.
This is wonderful.
It's been wonderful. Thank you.
Thank you.
I'm Helena Fogarty, and this was Inside the Round.